Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Friday, February 2nd, 2024. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. Let's take a look at the charts. I'll start with the big picture, work my way into the day itself. Just a reminder that about 6 weeks ago, we tested what had been a targeted resistance area, ceiling of resistance that is now at 252.73. At that point was in the low to mid 260s. And following the test of that channel top, we'd mentioned how you should allow for bearish rotation over the following 2 to 3, 3 to 5 months to the channel bottom that is presently at 174.76. Now, we can't say we absolutely expected it until we actually closed then below this combination channel bottom speed line several weeks ago that is presently in the low 230s, 232.04 to 233.69, well above the market right now. And following the settlement below these midterm trend defining support levels, we then indicated, yes, indeed, 174.72 remains a 3 to 5 week objective. And that was about 3 full weeks ago, as I recall. I'm looking at the chart right now, and it certainly looks that way. Now, that is the big picture. And I don't know if we'll see 174.72 over the next few days, but I will say that as long as we're holding below these what I consider to be near-term resistance levels, 186.48 is a descending channel top, and 189.48 is a descending one-third speed line, forming a range of resistance that can contain daily buying pressures, and below which this market should, by the end of next week or sooner, fall to the 174.72 channel bottom on the daily chart. Weekly chart, we have 174.76. In this area, this lower area, well equipped to contain selling, not only on a weekly basis, talking to 3 to 5 day swing traders, not only on a 3 to 5 weeks basis, talking to the 3 to 5 week swing traders, but also perhaps on a 3 to 5 month basis, because once we test channel support at 174.72, we can, over the following, once again, 2 to 3 months, 3 to 5 months, difficult to say. I mean, this took 5 weeks actually. So can we rally like that 5 weeks? We certainly could. But nonetheless, what I'm really saying here, of course, is as long as we are not closing below 174.76 and that we've come very close to testing it, you should allow for the low 250s and dropping over the next several months. And that is that. So in terms of the 3 to 5 week time frame, though, let's go back to this chart here. That once we test 174.72, we've got a 3 to 5 week target at 216.12. And once we test 216.12, we would have a 174.72 3 to 5 week target. We could trade inside of this wedge for the next couple of months. And as I just showed earlier, inside that we do have what I call the upper 180s resistance, 186.48 to 189.48. Now, we did close numerically in that vicinity on Thursday, and it really wouldn't take much to open today above 189.48. Even if we push through 189.48, you should respect the market's ability to recover nicely by the closing bell. And by nicely, I'm talking 198.88. So, opening above 189.48, the 186.48 to 189.48 region becomes your day support, and above which 198.88 is in reach. And if we close today above 189.48, I don't know by the end of next week, certainly possible, but I think over the next 1 to 2 weeks, this 216.12 descending 1/3 speed line would be in reach. By that point in time, we're talking late February, where we could top out into March trade and fall back again to 174.72. That is the 3 to 5 week swing trade right in here. But the 3 to 5 month investment, near-term investment trade is bottom picking 174.72 and reaching for selling 252.73 as an upside target. So if we do slip into the mid 170s over the next week or so, and you're an options trader, if you're a 3 to 5 week swing trader, 3 to 5 week options trader, you could reach for, say, 205, 210. Strike out of the money calls that don't expire for at least, I'd go a couple of months out on that expiration date. And I say 205, 210 because this 216.12 speed line is dropping daily. Also, if you're longer term options player and we're testing the mid 170s, you could reach for 245 or 250 strike out of the money calls that don't expire for at least, I'd go 6 months out on that. I think it could take 3 months. So you want to go twice the distance. That's at least the rule of thumb that I've always used. Now for the downside. I don't see this today, but if we sell off and close the week, Friday, below 174.76, this channel bottom, it does need to be by a 1% margin, and that would be 173.01 or lower today, Friday. If we close today 173.01 or lower, and bear in mind that is about a 15-point drop today that I am not anticipating, but I'm just kind of giving you the heads up that if you've been getting long or you get long in the mid 170s, and that is the name of the game right now, so long as we don't close below it. But if we do close at 173.01 today, that signals a meaningful bearish continuation as we move through February trade. We could do another one of these within 5 to 6 weeks, continue south into the 101, 106 region. It could also take the better part of 2 months, but anyway you look at it, if we settle today, the week itself at 173.01 or lower, I would hold this 101.81 to 106.64 region as a realistic 1 to 2 month target where we could actually bottom out on a quarterly basis, but not until we close below the 174.76 formation by a full 1% degree. And just a reminder that upside today, if we close above 189.48, and if you're short the market, talking to 3 to 5 day swing traders, I suppose, anticipating 174.72, if we close above 189.48, even if we open above 189.48, that is reason to consider exiting a short position and actually reversing and going long up to 216.12 over the next week or two. On an intraday basis, we could certainly test 198.88. I'll also say, and I don't see this today either, but if we did close above the 198.88 channel top, which I have as just an intraday resistance level, but if we do close above it, I see 216.12 as a realistic 3 to 5 day objective, where once again we can top out through February into March and fall away back into the mid 170s within 3 to 5 weeks of testing 216.12. Is there anything else to say? Working our way down, I do have 182.63. 182.63 is nothing more than the low settlement price from about a week ago, a week and a day ago. That is the low settlement price. That is the lowest that we have closed actually following that July high. And it can contain intraday selling pressures. And yes, if we break 182.63 today, especially early in the day, by the closing bell, we could test the targeted 174.72 formation, where once again we can bottom out through next week, through February, into the second quarter, possibly through the second quarter, because once we test it, we can rally into, once again, the 240s, 250s within several months. I think that pretty much rounds it out. Please click like, share, subscribe. Check out wickedstocks.com for that 5-day free trial. We offer lots of good stuff you're really going to like. And if you don't, you can bow out at no cost to you whatsoever as long as you cancel within 5 days. I'm going to leave it at that. I'll be back Sunday afternoon, of course, with Monday's Tesla report. And you have a great weekend.